This video is for general informational purposes only and does not constitute legal or tax advice. Tax rules can change, and individual situations vary. If you're self-employed, there's a high chance you'll owe more tax than you expect, not because you did anything wrong, but because nobody explained how the system actually works. In the next few minutes, I'll show you how self-employed tax really works, and the one mistake that catches most people out. By the end of this video, you'll understand what you're actually taxed on, when tax is paid, and how to avoid the most common beginner mistakes. Let's start with something most people misunderstand. Being self-employed doesn't just mean working for yourself. It means no one automatically deducts tax for you. When money hits your account, it looks like it's all yours, but part of it already belongs to HMRC.
So how much of it actually belongs to you?
Here's the first surprise. You're not taxed on how much you earn, you're taxed on how much you keep. That's called your profit. Profit is your income minus allowable business expenses. This single misunderstanding is why people panic when their first tax bill arrives. Most self-employed people deal with three things: income tax, national insurance, and in some cases, VAT. You don't need to memorize rates right now. What matters is understanding what triggers them, and when.
And this is where timing becomes critical.
Unlike a job, self-employed tax is usually paid after the money is earned. That delay feels helpful, until it isn't. Because by the time the bill arrives, the money is often already spent. This is where many people get caught, not because tax is high, but because it was unexpected. The biggest mistake beginners make is treating all incoming money as spendable. In reality, some of it is already spoken for. A simple habit many people use is separating money for tax as it comes in, so there are no surprises later. You might also hear something called payments on account. It sounds intimidating, but it's simply HMRC asking for advance payments toward your next bill. Once you know this exists, it stops being scary and starts being predictable. So here's the truth: self-employed tax isn't complicated, it's just poorly explained. Once you understand profit, timing, and planning, it becomes manageable. If this video cleared things up for you, future videos will explain deductions, deadlines, and common legal mistakes that cost people money. Subscribe if you want tax and business rules explained without jargon or scare tactics. Thanks for watching. If you've enjoyed the video, please give us a like and subscribe for more no-nonsense tax information. Until next time.